Hi guys, this is CA Balakrishna from lecturepedia.in. In this video, we will be revising SA 570 going concern, and these notes you can find in our Telegram channel, and the link for the Telegram channel you can find in the description below. Okay, now starting with SA 570 going concern. Basically, going concern is one of fundamental assumptions. Okay, we have three fundamental assumptions. First one is consistency, second one is accrual, third one is going concern. Now this standard SA 570 will be dealing with auditor's responsibility relating to going concern assumption of the entity. Okay, basically going concern means the assumption that entity will continue its business in foreseeable future. Okay, that would be going concern assumption, continuing business for foreseeable future. Now relating to this going concern, what is the responsibility of management and what is the responsibility of the auditor? First of all, what is the responsibility of management? Management is responsible to assess entity's ability to continue as a going concern. Okay, management has to assess whether entity will be able to continue as a going concern for the foreseeable future. Okay, this assessment has to be made by the management. Now what the auditor will do? Auditor has to obtain sufficient and appropriate audit evidence regarding the assessment of going concern that is made by the management. Okay, whether the assessment that the management has made relating to going concern of the entity is correct or not. Okay, relating to that aspect, sufficient and appropriate audit evidence has to be obtained by the auditor. That is the responsibility of the auditor. See, auditor is responsible to obtain sufficient appropriate audit evidence regarding appropriateness of entity's ability to continue as a going concern. Okay, management will perform assessment of going concern, whether such assessment is correct or not. Okay, regarding that, sufficient appropriate audit evidence will be obtained by the auditor. Hope this is clear. Okay, we are saying that management has to make assessment of entity's ability to continue as a going concern. Now how the management will perform its assessment? Basically it will try to identify whether there are any events or conditions that may cast impact, okay, on entity's ability to continue as a going concern. Okay, what are those points? Basically we will be dividing these conditions or events into three types. First one is financial conditions, second one is operational conditions, third one is other conditions or events. Okay, now under financial conditions, following are present. Financial conditions: substantial losses. If the entity is incurring substantial losses, okay, in that case this is one of the event which may cast doubt on entity's ability to continue as a going concern. Okay, if this event is present, it is not confirmed that entity will not be able to operate as a on a going concern basis. It will just cast a doubt on the entity's ability to continue as a going concern. Hope this is clear. Next, discontinuation of dividend. Okay, management has stopped giving dividend. Adverse financial ratios. Okay, entities having negative ratios. Inability to pay to creditors. See, if the entity is frequently defaulting in payment to creditors, even this is one of the condition that may cast doubt on entity's ability to continue as a going concern. Okay, next, net liability position. Entity is having negative net worth. Okay, withdrawal of financial support. Okay, the bank from which entity has raised loans has stopped giving loans. Okay, this is one of the condition that may have impact on entity's ability to continue as a going concern, or non-renewal of borrowings. Okay, example ODs. Okay, overdrafts that the company has raised are not renewable, and asset value has deteriorated. Okay, those are financial conditions that may cast doubt on entity's ability to continue as a going concern. Moving to operating conditions, loss of key managerial personnel. Okay, the key managerial personnel of the entity have lost. Okay, they might have died or they might have resigned. Okay, this may cast doubt on entity's ability to continue as a going concern. Labor difficulties, management intention to liquidate the entity. Okay, management itself wants to liquidate the entity. Loss of major market or key customer. Okay, major market has been lost by the entity, or emergence of successful competitors. Okay, other for events or conditions, non-compliance of statutory requirements, pending legal proceeding against the entity, changes in laws and regulations. These are the three types of events or conditions that may cast significant doubt on entity's ability to continue as a going concern. Now, what is the audit procedure that the auditor will perform? Just a second. See, now what is the audit procedure that the auditor will perform? Basically, auditor will inquire whether management has made assessment of going concern assumption or not. If management has made assessment of going concern assumption, then auditor will discuss with the management whether management has identified any events or conditions that may cast significant doubt on entity's ability to continue as a going concern. Okay, if the management has performed assessment of going concern, whether management has found any of these conditions or events during its assessment. Okay, in case management has not performed such assessment, then auditor will discuss with the management basis for intended use of going concern assumption. Okay, management has not performed assessment of going concern assumption, but management is using going concern assumption for its financial statements. Now, what is the basis for using of this going concern assumptions by management? This will be inquired by the auditor with the management. Okay, you have not performed the assessment of going concern, but you are using going concern assumptions. What is your basis for using this going concern assumptions? This will be inquired by the auditor with the management, and auditor will also ask the management whether there is any possibility of existing of conditions that may cast significant doubt on entity's ability to continue as a going concern. Okay, and whether any events or conditions exist that may cast significant doubt on ability to continue as a going concern. This will be inquired by the auditor. Coming to the reporting part, basically this reporting part I have divided into three parts. Firstly, going concern assumption is appropriate. Okay, management is using going concern assumption, it is appropriate, but there is significant or material uncertainty relating to this going concern assumptions. Okay, as of now, the going concern assumption that is used by the management is appropriate only, but there is certain material uncertainty relating to this assumption. Let's say there is a suit pending against the entity. Okay, now let's say total net worth of the entity is 100 crores. Now a trademark suit is pending against the entity. Now if the entity loses this trademark suit, entity has to pay some 200 crores as penalty. Okay, now if by inquiring with the lawyers, auditor came to know that there is 70% probability that entity will win the case, and there is 30% chance that entity will lose the case. Now entity started using going concern assumptions. As of now, using going concern assumption is okay, but there is a material uncertainty relating to going concern. If the entity loses the case, then it has to pay 200 crores as a penalty, but net worth of the entity is just 100 crores. In this case, the going concern assumption of the entity will be affected. This will be there will be material uncertainty relating to going concern assumption. In that case, auditor will see whether entity has disclosed in the financial statements the event that is causing material uncertainty relating to going concern assumption. Okay, see, auditor will check whether financial statements adequately disclose the event due to which there is a material uncertainty. Okay, whether the entity has properly disclosed information relating to this case, this suit. Okay, if entity has disclosed, yes, entity has given proper information in the financial statements, in that case auditor will give unmodified opinion along with emphasis of matter paragraph. In case information is not given in the financial statements, then the auditor will give either qualified or adverse opinion. Hope this is clear. Now, why qualified or adverse opinion? Basically, auditor here is having sufficient appropriate audit evidence relating to material uncertainty. Thereby, in this, since he is having audit evidence, disclaimer will not be given since there is sufficient appropriate audit evidence. Okay, the opinion can be either adverse or qualified. Now, if this uncertainty is material but not pervasive, then qualified opinion will be given. If it is both material and pervasive, adverse opinion will be given. Hope this is clear. Next, second situation, management is unwilling to make its assessment. See, management is using going concern assumption, but management has not made assessment of going concern assumption of the entity. Okay, it is unwilling to make this assumption. If it is unwilling to make this assessment, then auditor cannot obtain sufficient appropriate audit evidence. Okay, if management itself has not performed the assessment, how can the auditor verify what the management has performed? Okay, in this case, auditor cannot obtain sufficient appropriate audit evidence of the assessment made by the management, because management has not at all made any assessment. In that case, auditor will give qualified or disclaimer of opinion. Hope this is clear. Use of going concern assumption is inappropriate. Okay, management is using going concern assumption, but auditor, based on his audit procedure, comes to a conclusion that management should not use going concern assumption. Okay, the going concern assumption that is being used by the management is inappropriate. In that case, auditor will give adverse opinion. Okay, express adverse opinion. Hope this is clear. By this, revision of SA 570 has been completed. In the next class, we will be discussing SA 580, written representation, which will be last standard for this SA 500 series. Okay, and in case if you wanted to purchase classes, paper 4 classes law for CA final and paper 6D economic law classes at CA final level, you can visit our website lecturepedia.in and you can place your order. Okay, bye bye. Take care.